You know, I think the markets are very comfortable, although they probably shouldn't be. But the market seems to think that as long as this is isolated to Portugal, let's throw in Ireland and Greece and Spain, and it doesn't affect the banking haircuts of France and Germany, this is an isolated case. The market doesn't seem to be awfully worried about it.
And do you think that this will come as a worry down the track, or how do you actually expect this to play out? Can markets continue to look through it?
As long as it's contained, as I said, and isolated, as long as France and Germany do not need to take banking haircuts and these restructuring can happen, then I think we'll see right through it. I mean, the economic expansion that's going on in Europe is so strong right now. It seems like it can outweigh anything right now. I just read a report that France, the 5th largest economy in the world, they had a consumer spending number that came out last week, 3 positive numbers in a row. I mean, the economy is doing very well, and it seems like the good news is outweighing the bad news.
Which is in part why the ECB is expected to hike rates tomorrow. It's interesting, though, that you're seeing the euro continuing to gain, even though almost everyone, including you, is expecting that hike. How do you understand that? Can the euro have more momentum from here? What exactly is the market pricing in at the moment?
Well, the market's definitely pricing in the quarter basis point hike tomorrow, just in terms of, you know, they've been so resilient in saying they're going to raise rates, and they'll probably raise rates another 0.75% by the end of 2011 if the numbers continue to come out as well as they've been coming out. So, ECB, more power to them. Right now, the Bank of England is going to report tomorrow, too. They're not expected to do anything, but don't be surprised if they're not too far behind the ECB, because their numbers are coming out a little bit inflationary as well.
How do you understand, with this context, gold going up? Do you see any sign of the fear trade returning in that move?
Gold prices keep going up and up and up. Yeah, we're up like, what, $9 today at $1,461 an ounce. It's profoundly confusing because right now it makes sense for gold to rally, just given, even though the rate environment might say gold shouldn't rally, but you have all the geopolitical crisis going on. You have emerging market inflation. You have the physical demand of China, and also gold has become a tail risk hedge for traders, so therefore it should go up, I suppose. But on the other side of that, there's going to be a lot of headwinds going forward, with rates continuing to go up around the world, including the United States, which will probably have to raise rates a year from now. So can gold go up to $1,500 an ounce? Why not, given the geopolitical concerns, given tail risk hedging? But when rates continue to go higher and higher with inflation, I would see gold leveling off. Okay,
so that's why you'd be more optimistic about the gold price, say, through 2011, but 2012, that's a different story?
Absolutely. I put it this way. I understand why gold is going up, given why people buy it. I'm not sure I would buy it, but people buy it for tail risk hedging, geopolitical concerns. But as I said, the big kicker is rates, and rates are going to be going higher, so I don't think gold should go too much higher. $1,500 an ounce, sure, but any higher than that, I don't think so.
You feel that silver can head a lot higher from here. We've seen it at 31-year highs today. There is talk of whether that particular market is in a bubble, though. What do you think?
Well, think of it this way. Look what happened when we had the earthquake and tsunami in Japan. Look what happened to silver. Look what happened to copper, palladium, platinum. Those metals got absolutely destroyed. What it tells a trader is that these metals, especially silver, is speculative based. There's a lot of funds buying silver. I can see it rallying with the global expansion that we're having, but much higher than here, you're going to need to show me a much bigger expansion and a much bigger reason to use silver to justify the price. I'd be really scared of the volatility that's inherent in silver.
Can I ask your thoughts briefly as well on the China rate hike that we've seen this week? And that always makes big headlines for us here in Australia, as you can probably appreciate. Generally, you're pretty positive towards the commodities complex. How do you take into account China raising rates and slowing things down at the same time as, you know, as you've already pointed out, we start to see some of the other developed nations breaking ranks and starting to raise rates as well? How does that feed into a positive view of the commodities complex?
Well, on the face of it, it shouldn't be positive, but it is right now because China seems to be experiencing a soft landing. They have strong global GDP growth, the industrial production's high, and their fixed asset investment growth still continues to show very positive numbers, even with the rate hikes. It's not something that most traders have thought would happen. They thought that China would see a severe correction, but they are still expanding, and I think they're experiencing a soft landing right now. All the numbers are good despite the rate hikes. So the economy is moving along. Commodity prices should keep going higher. And in your country, obviously, the Australian dollar will continue to benefit, up at 103.60 again today.